In this lesson, we're going to take a look at everyone's favorite topic, income tax, because nothing is more exciting. All right, much like the last lesson, you've got a handout that you can fill in as we go, but I'm going to actually, rather than fill it in by hand, go over to a PowerPoint presentation type thing in the video and go through it that way. And then I'll pop back to this sheet when we actually have to do a couple of problems. But for the most part, watch the video, pay attention, and fill in the blanks as you can. And I'll jump around a bit because I do want to show you some things in addition to what's on the sheet. Okay, so for starters, let's take a look at income tax. So there are a few things that you should know. First of all, let's just talk about some of the forms that you need to have to fill out your actual income tax. And this applies even if you get someone else to do your income tax for you, because while they might be able to do your income tax return, it doesn't change the fact that you have to provide them with the papers in order to do so. Now, this seems like a lot, and I realize it's really is a little bit overwhelming at first. I can tell you as somebody who's done them a few times, it's not as bad as it seems, and I'll show you why very shortly. So the forms that you need, the first thing you need is something called a TD1. And by the way, you're not going to remember all these. You might remember a couple of them, but you should be able to quickly look them up and remind yourself what they are. So the TD1 is personal tax credit return, and it's the thing that tells you, is basically a sheet that tells you how much you can claim in deductions off your income tax because you've given to things that are basically good for society or good for something else. So they're basically saying you spent money on this, that's cool. We're not going to charge you as much income tax now because you paid for those things. So that form tells you how much that you can actually claim. This next one is one you're going to want to pay attention to. If you only remember one of them, it's probably going to be this one. It's your T4. And the reason for that is this is basically the sheet of paper you get from your employer that says how much you earned and what you've paid for throughout the year. So it'll say they've earned this much money, they've paid this much to various deductions, things like income tax and CPP and EI. So that's the form that you've got to make sure you get from your employer. Everyone with a job will have one of those. If you have 2 or more jobs, you'll have 2 or more T4 forms. And then there's some other variations that come with the T4, but none that we're going to worry about. A T5, some of you at some point may need one of these. It's very similar to a T4, except instead of being a thing from your job saying how much money you earned, it's a thing from the bank or financial institution that says how much you've earned from investment income. So if you've bought stocks or bonds or something like that, and you have to pay income tax on any money that you earned off of those, that would be through a T5. And then the T1, this isn't something you need to like necessarily get off your employer or anything. This is something that everyone gets. It's the actual benefits booklet that you fill out to return your taxes. Now, I should point out that every year more and more people start doing it online. So the online versions are essentially a fill in the blank T1 form. But that is the actual form that's filed with the government to let them know how much you either owe or how much they owe you. The T4 and the T5 are ones that you get from, like I said, employer or financial institution with the kind of data that you're going to fill in, and the TD1 lets you get out of some of paying those things. So I'm going to take just a moment and I'm going to actually bring up those forms to show you what they look like. And I'm doing this because I want you to see that they look intimidating but aren't necessarily. So for instance, the TD1 form, these aren't current ones, by the way. These are, I think, from 2016. I think one of them is maybe from 2015, but they haven't changed much over the years, and I doubt they will change much into the future. Some of the numbers might change, but the actual details won't. So this is a TD1. This is the one that lets you figure out how much tax credit you can get for things that basically you're allowed to. So what I really want you to see is not to memorize all of the stuff on here because there's a lot of information on this, like a lot of information. But what I do want you to see is that most of the information you'll be able to leave blank. So obviously the little part at the top, filling out your name and address and all that stuff you'll have to fill in. The basic personal amount is basically how much you're allowed to claim that says you don't have to pay income tax on that amount. So if you make under $11,474, at least as of 2016, you don't pay income tax on that. You're basically scot-free. But anyone who makes that little is, I mean, that's less than minimum wage for half time. So this is basically high school students with part-time jobs, or really anyone with part-time jobs at a relatively low wage. So something in the minimum wage up to a little bit above that, but not much. And now, again, I'm not going to get you to memorize these, but I just want you to go through these and think about how many of these don't apply to you, which means you don't have to fill them out. So are you a family caregiver for a child under 18? Nope. Are you over 65? Nope. Do you have a pension income? Probably not. Tuition, education, and textbook amounts. Now, this you might have if you go on to college or university. But again, if you're in that situation, then you read the details and fill it out. But most of them you skip over. Disability. Are you disabled? Hopefully not. If you are, then you look up this amount and you claim it. A spouse or common law partner amount, if that applies to you. Amount for an eligible dependent, that would be children or some other person you're taking care of. Caregiver amount, so basically if you're taking care of somebody who is older, um, a grandparent perhaps, as their personal caregiver, that might apply to you. Amount for infirm dependents 18 and under, so that's, well, basically unless you've got someone under 18, don't even bother looking at it. Amounts transferred from your spouse, if you have that, great. If not, skip it. Amounts transferred from a dependent. This can sometimes happen if, say, for instance, you're in college and you don't have a job or you're not working much. You can pass on that tax credit to your parents or whoever's paying or helping you with your tuition so that they can at least get a little bit of a tax break. And then you add those things up. Page 2, couple of check boxes. That's about it. So I want you to see that even though that form looks really intimidating, there's like 4 things that might apply to you. And the ones that don't, you can just skip. Your T4 form, this is the one that you get from your employer. It's literally, here, I'm just going to zoom out a little bit, or full page. That's what I wanted, page level. This is actually 2 T4 forms on 1 page. So the full T4 form is actually just half a page long. And the nice thing is that all of the boxes basically have numbers on them. So your employment income is box 14, and it says line 101. What that means is on your actual income tax form, your T1, line 101 is going to say fill in box 14 from your T4 form. So it's very simple in that sense. It tells you everywhere where you're filling out stuff. Just go to this form and go to this box number and write down the number you see there. So not a lot of information there, at least not a lot of information you need to like concern yourself with. The T5 form, pretty similar, except again, it's for investment income. You'll notice everything has little box numbers. So when you're filling out your actual income tax return, it'll tell you to fill out box 23 from T5 or whatever. So not much there. And now your actual T1 form. Now this is if you wanted to fill it out by hand and you don't want to use an online service, this is how you do it. And again, you'll notice this is 4 pages long and it seems super complex. But if you actually just take the time to read through each thing, it's pretty simple. This is just telling them who you are, where you live, social insurance number, date of birth. Is this return for a deceased person? If it's for you, hopefully not. This usually only really applies to like lawyers and stuff when they're filling out something for someone who passed away through the year. Marital status, hopefully you know which one you are. Email address, information about your residence. So have you lived in Canada, which province, territory, that stuff. Information about a spouse or common law partner. So we're already a quarter done the form. On our second page here, this is going to be where we start filling in stuff. And for instance, total income, employment income, box 14 of all T4 slips. And there's your box 101. So again, we talked about that with the T4. Just look into the box labeled 14 on your T4, write that number there. Now, I'm going to go through this relatively quickly just to show you how little of it applies to most people. So I'm going to assume that you're a high school student, a college student, or a recently graduated student, somewhere a recently graduated person, I should say. And we'll just see if we can skip these. Commissions included in that. So if you had a job paying commission, you'd fill that out. Wage loss, no, nope, I don't think so. Other employment income, probably not. Old age pension, nope. CPP benefits, nope. Disability benefits, again, maybe. But if you have that, there's a separate form to fill out. Other pension, nope. Elected split pen, nope. Universal child care benefit, maybe if you have children. But probably nope. Employment insurance, again, telling you to fill out, if you got employment insurance that year, it tells you which box to fill out and from what form. And as I keep going down here, rental income, most people wouldn't have that. Support payments received, probably not. RSP income, you're probably not collecting retirement savings. Self-employment income may apply to you, but again, if it does, look at it. If it doesn't, keep going. Workers' compensation, social assistance, nope, 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 nope. Okay, I think I'm going to stop there just because I don't want to bore you too badly, but the remaining pages are very similar. What you do is you see all these lines and you get so intimidated, which everyone does. If you just realize that 90% of them are things that don't apply to you, you're in good shape. So things like this, union dues or professional dues. So for instance, if you are working as a construction worker, an electrician, you may have to pay to continue to be part of that organization, to be accredited. Or if you're in a union, you pay union dues, that goes there. But for the most part, a lot of these are going to get left blank. It tells you all the things to add and subtract. It's very straightforward. So the good news is if you have to do this, it actually isn't that difficult. So you've got 2 pages of questions like that. This one's pretty much just adding up and subtracting stuff. And then you fill in a thing saying, here's where I want you to put my money or take my money from. Um, and here's the thing that says I didn't lie. That's it. So if you're scared by income taxes, what I would recommend doing is trying to do it on your own before you go hire somebody or expect someone else to do it, and you might find that it's actually surprisingly easy. Okay, so those are kind of the 4 big forms that most people will have. Again, there's a lot of specific circumstances that may have different forms, but most of them are pretty straightforward as well. All right, so those are the forms you need. Now, how much are you going to pay in income tax? So what you've probably heard before is the phrase income tax bracket, which is suggesting that different amounts that you make, you have to pay different amounts or different percentages of income tax. And what you'll see here on the left, and now this is for 2022, and what I mean by that is the amounts that you will make this year in 2022 and then pay in income tax at the beginning of 2023. So what it says is if in 2022 you earn less than $46,226, which is the first bracket, then you're going to pay 20.05% of that. Anything that's above that $46,226 up to $50,197, you're going to pay 24.15% of that. Now, calculation-wise, this is exactly the same as step commission. So if you understood step commission last unit, then this is basically the exact same math. You're paying different percentages based on different earnings. Now, while it may seem like there's a lot of numbers here, if you know somebody who's making over $150,000 a year, I don't know why they're doing their own taxes. They're really, really well off. So for most people, you're only going to have to worry probably about the first 3 or 4 steps at all. Even the 4th step doesn't kick in until you make over $92,000 a year. Again, if you make over $92,000 a year, that is fantastic. But for most people, especially people starting out their careers, you're probably going to be in the 1st step or the first 2 steps. So it's not really a difficult calculation. Okay, I'm going to just stop that for one moment, and we're going to go back to the lesson sheet. And you'll notice I've already filled in some of those numbers there. I've also put a link there. This changes based on every year. This one here is currently the tax rates for the year 2022. But I have no idea when you're going to watch this video. I think it's going to become a YouTube classic. Maybe people will still be watching it in 30 years. All you have to do is go to that site above or Google income tax rates, and you'll find basically a table that looks just like the other one that we just looked at. In fact, I'll show you what that website looks like. It's very busy. There's a lot on this page. But if you scroll down for a moment, you'll get to this one here, which is the combined federal and Ontario tax brackets for 2022. And this is basically the information that I just filled in on that table. So a whole bunch of extra columns here that we don't really need. All we need is the first number and the tax rate, the 20.05%. Now this one, it says for the first 46,226, and the next one says over 42,226 up to 50,197. Well, that's a little bit redundant. Obviously, it's anything over the first step, so they didn't even need to really write this, which is why I didn't include it in the table in the PowerPoint. But basically this number, this percent, up to this number, this percent, up to this number, this percent, and so on. Okay. So let's try to do this using those numbers. And we'll start off by doing it for $85,000 a year. Now, $85,000 a year, well, we do make money in the first 46,226, so it goes over that. So I'm going to actually just write it this way. 46,226 is the first step. If you want, you can write down little steps over here at the side. Now the next one is up to 50,197. So what we're going to do, and I'm not going to write it out because it becomes very tedious to write out all the details here, but we want to know the difference between 46,226 and 50,197. So I'm going to do 50,197 minus 46,226. And so kind of like the second step of our commission, this would only be on about $3,971. So everything from 46,000 up to the 50,000. And then for our next step, we're going to do the 81,411 minus the 50,197. And that gives us 31,214. I don't know why I wrote that up as high as I did. Give it a little space. 31,214. Okay, so that takes us up to $81,411. Now the next step, it says anything up to 92,000, but we don't make that much. We only make 85,000. So I'm going to do 85,000 minus 81,411. And that gets us $3,589. Okay. So those are the amount of each steps. They total up $85,000. Now we just need to multiply each of those steps by their proper percentage. If it's okay with you, just to save down on some writing, I'm going to convert all of these to decimal numbers right off the bat. So for instance, the first one is 20.05%, which is 0.2005. The second one will be 0.2415, 0.2965, and 0.3148. All right, from there, we just multiply those together to find out how much income tax we owe on each step, the same way that we would have done with step commission. So 0.2005 times 46,226. And before I write down this answer, you may want to try this on your own. If you want to pause the video, try to get these numbers, and then unpause it and come back and double check. Assuming that you've done that or you're not going to. This one should be $9,268.31. The next one, 0.2415 times 3971 is $958. Actually, it's 958.996, which is actually going to round off to exactly or to an even $959. By the way, I think you can see how it would be very easy to make a mistake in one of these steps, which is why it's important to show your work so that if you do make a little mistake, I can figure out where it is and give you some marks. The next one is 0.2965 times 31,214, which is $9,254.95. And the last one, 0.3148 times 9589 is $1,129 and rounds off to 82 cents. All right. So now if we want to figure out what total amount we owe, we just add up those four numbers. So 9268.31 plus 959 plus 9254.95 plus 1129.82 equals, and the number I get is $20,612.08. Okay, so at this point you might be concerned, what if I did something wrong? What if I goofed on this? A good way of doing this to double check it is to use one of the approximations that we used earlier. And that's for most amounts that aren't, really, really high for income tax purposes. We would just basically say, what is a quarter of 85,000? So just 85,000 divided by 4, which is really saying 25% of 85,000. If we just did a quarter of 85,000, we get 21,250. Our actual answer is 20,612. So it's in the same ballpark. So I have a feeling we probably did this correct. I don't know, maybe we have the tens digit wrong or the ones digit wrong or something like that, but it's pretty close to what we would expect it to be. Now for the second one, just to estimate it before we even do it, a quarter of 44,000 should be around 11,000. But because it's a fairly low number, I'm going to guess it's probably closer to 10,000. And even then, I'm not sure it's exactly 10, maybe it's 8 or 9, something like that. But that's the kind of answer we'd expect. Now, fantastic news with this. It's 44,000. Well, I guess it's not fantastic news if you earn 44,000, but for our purposes as mathematicians, 44,000 is less than the first income tax bracket maximum of 46,000. So what that means is this is a one-step problem. So we just pay 20.05% of the full amount, 44,000. And so 0.2005 times 44,000 would be $8,822. Now my ballpark guess was 10,000-ish. I'm off, but I'm not off by a whole lot. Again, the lower it is, the less it'll be relative to 25%, and the higher you make, it might be a little bit over 25%. But for the most part, 25% is not a bad approximation for most calculations. Okay, and then the final one, 52,000. Okay, so going back up, 52,000 takes us into the third tax bracket. Now to save ourselves a little bit of time, I'm going to refer back to A because our first step is going to be exactly the same because it's over 46,226. Our second step goes up to 50,197. So it's actually going to be the same too. And in fact, I might as well write down what those are equal to. So that's 926831. And this one's 959 exactly. The only thing that changes is our third step because we don't make enough to finish that step off. So again, reminder that for our second step went up to 50,197. And since we're only making 52,000, I got to do 52,000 minus 51, or sorry, 52,000 minus 50,197, which gives us just $1,800. So that's going to be the 0.2965. That part stays the same as our first part because that's just the tax rate for that bracket. But the amount we made was only 1803. So now I have to do 1803 times 0.2965, which is 534.59. And then we can add up all of those. 9268.31 plus 959 plus 534.59 is $10,761.90. And again, let's just approximate the 52,000 income tax at 25% or 1/4. And if we do 52,000 divided by 4, we'd estimate our taxes at 32,000, or sorry, 13,000. This is a little under 11,000, so it's a little bit lower, but again, 52,000 is on the low end of the numbers. Okay, so that's basically how to calculate it. Again, exactly the same method as we used for step commission. So hopefully that will look familiar. Now we're going to look at things that can lower our income taxes and things that taxes pay for. So if you'll just bear with me for one moment, I'm going to go back to the PowerPoint. Okay, things that lower my income tax. So this would be things, for instance, that were listed on the T1D form. Was it T1D? TD1, that's it, TD1 form, basically the personal claims. So you get your personal amount, which again is around $11,500. You have to check by that each year. It changes every year, but some amount you're going to get tax free. And by the way, the amounts that we just calculated assume that you're paying tax on the full amount. You're going to pay tax on those amounts minus whatever you get to claim as income tax free, basically. Donations, so if you make them to any kind of charity. Now, this doesn't count if you, for instance, drop some change into, a mug somewhere in the mall for charity, or if you give someone $5 here and there, you actually have to get a receipt for it, and receipts are only issued if they're over $20. So just to be aware of that. And then any kind of care, whether it's for children or if you've got a older relative that needs to be taken care of, or if there's somebody disabled that you're helping take care of, or if you have a partner, those are all things that you might get an income tax benefit for. And any education, which is a pretty common one for people your age. If there's any education expenses, you can claim those so that you don't pay income tax on that or that amount. Disabilities. If you have a disability, maybe you need a wheelchair or a walker or some sort of treatment or just about anything, usually you can claim whatever you spend on that. Hopefully that doesn't apply to you. I'm hoping everyone is healthy, but if you do have a disability, please be aware that you can claim that so that you don't pay income tax on those amounts. Pension and savings plans. So anything that you're putting in usually isn't taxed. So RRSPs, the beauty of putting money into a registered retirement savings plan or a registered education savings plan is that you don't pay income tax on that amount. Now, when you take the money out of an RRSP, you do pay tax on it then, but usually it's when you're retired, and because you're retired, you have no income. So if this is your only income, very little income tax is taken off from it. If there's any employment expenses, so these are things like union fees and dues, which we saw coming in on those forms. There's other things you could get. I'm only putting some of the common ones here. Obviously, there's plenty there. If you're not sure, you can always ask a tax expert or look it up and Google it online. Make sure you Google it for Ontario, Canada, so that you're using the right tax rules. I've seen people do that before where they're like, well, see, I'm entitled to this. I'm like, no, that's BC. BC does that. We're not in BC. But you are entitled to things like moving expenses if you have to move for work, public transit costs if you have a bus pass, you may be able to claim that. And buying your first home, take advantage of that. It's one of the few times you can pull money out of an RRSP without actually paying income tax on it. It's to buy your first home. Doesn't apply if you're buying additional homes. So once you've moved to your second home, you no longer get it. And there's a whole lot of things there, more than I could ever possibly tell you about in this lesson, and definitely more than you would remember. So just be aware that there are lots of other things that you could apply to. Now, I felt like this would be incomplete if I didn't at least talk a little bit about what paying taxes does, because most people overlook it and think that taxes are just this government ripping us off, but they pay for a whole lot of things that mean a lot to us. So things like schools, hospitals and healthcare, police, firefighters, roads and infrastructure, the military. And I know lots of people are like, well, I don't want to pay for those things. I don't like the police, or I don't like, schools or whatever. I don't have a car, so why am I paying for roads? And the answer is because it benefits everybody, including you. So for those of you who are like, well, I don't like school, I don't want to go to school, that's fine, but you do want to play video games that were designed by people who went to school. You want your water to clean enough to drink, which was made by scientists who went to school. So even if you don't go to school or you don't have kids that go into school, paying for education is still something that benefits everybody in society and therefore benefits you. Hospitals and healthcare, same idea. Even though you're not sick, you don't want everyone around you to be sick because then you won't get the things you need. I've often heard people say, well, I don't want to pay for the police. Well, then my question to you would be, how much do you think it's going to cost you to hire a personal bodyguard to follow you around 24/7? And if you think you don't need one, what happens if somebody just comes up with a gun and takes your stuff? Because who do you report that to if there's no police? So those are important things. Same thing. If you don't want to pay your taxes for firefighters, then you have to pay a personal company, like a private company, to come put out a fire if you have one. And when your house is in flames, you don't tend to have a lot of negotiation power when you're on the phone saying, I'd like you to come put this out, meaning that they can charge you whatever they want. You're going to have to pay it. Otherwise, you're going to have to deal with the fact that your stuff's gone. Roads and infrastructure, whether you own a vehicle or not, the roads are what gets the things that you need to buy, your food, your groceries, your everything else to the stores. So you do need them there and they do need to exist. So you benefit from them even if you don't directly use them. These things are all a little bit more minor than the other ones, but things like natural resources, so forestry, keeping our forests clean and protected, international initiatives like embassies. So you probably, with things going on in the world right now, it's kind of important to have Canadian voices heard in different countries. Prisons, like them or love them, they're kind of there, and someone's got to pay for it. Social support systems. So this would be there's a load of them out there, but any special organization that you can apply to get some sort of benefit if you are either not have a lot of money, so like food banks and stuff. While they're not necessarily paid for directly by taxes, usually they are supported in some way, shape, or form by taxes. Health and safety inspectors. So if you want to not die when you eat food that was made improperly or diseased, you'd want people to inspect those things. Science programs that usually benefit all of society. And then some of our taxes go to equalizing for those in remote areas. So for instance, Canada Post charges a fairly similar amount to deliver a package, whether it's from Kitchener to Toronto, or if it's from Kitchener to some like random outpost up north. And taxes go to help make it so that people that live in those areas aren't overly burdened by the costs involved with those. And honestly, they already are overburdened in most cases. If you look at food prices in the far north, it's kind of disturbing. Makes our problems here look very small. Okay, normally I wouldn't do this, but there's just a couple pages of reading here or writing here, and I will actually read it to you because I think it's worth listening to. I know some of you may choose to turn off the video, but I think it's actually important to hear this. So 10 reasons to feel good about paying taxes. Taxes are the price we pay for civilization. More specifically, taxes are the price we pay for the Canada we love. Now, I know some people, there's things about the country you don't love. There's things about your life you don't love. There's things about a lot of things you don't love. But overall, you've got to admit that compared to many other countries, we have it pretty good. And a lot of that comes from our taxation. Americans always complain that Canadian taxes are crazy high, but they pay for their own health care, which is ridiculous. I had a cousin, for instance, who was in Canada, was joking about how we had to pay stupid taxes for healthcare, and then on the way home actually tripped and broke his ankle, and it ended up costing him over $50,000 out of pocket to have that fixed, because they don't have health insurance or don't have free healthcare. Taxes put out fires, keep our streets safe, provide our children with education, provide our families with health care, ensure our food and water are safe, create legal safeguards for businesses and employees, provide parks. In other words, provide us benefits every hour of the day, every day of the year. The average Canadian household receives around 41,000 in public services each year, with no markups for private profit, a tremendous bargain for the vast majority of Canadians. I'm going to point this out. When people complain about income tax being too high, it's actually usually people who are on the poor end of the spectrum because they don't like seeing the little bit they have go to taxes. But the good news is you're putting some money in the pot, a percentage of your pay, which isn't a lot, but so are rich people. They're putting percentages of their pay in the pot, and then you both draw from it. So you both get provided with the same health care. Really what that means is that if you're on the low end of the spectrum, you're being subsidized quite a bit by people who make a lot more money. So getting rid of taxes is a bad idea if you're on the low end of the spectrum. It actually really, really benefits you. Everyone puts in the same, everyone puts in the same percentage, or as you just saw earlier in the lesson, a slightly smaller percentage if you make less, but they draw the same out. So you're putting in a smaller amount, but getting more out than the average person. Past generations paid taxes for what we have today: schools, hospitals, courts, roads, public transits, parks. Our taxes today allow us to pass on these benefits to future generations, our children, grandchildren, and great-grandchildren. I can say that as high school students, most of you probably don't care about that now, but you will someday. If we ignore, shortchange, or postpone funding for social, economic, environmental problems today, the solutions become more expensive in the future. Something you've probably seen with, I don't know, climate change. Public sector employees work hard, often in difficult circumstances, to keep government running and provide the public services we need. We need to attract and retain hardworking public employees and pay them fair compensation. Money begets power, which begets more money and more power. Taxes provide a counterbalance by softening extreme disparities in wealth, power, and benefits. I think if you actually look at Canadian, like rich Canadians versus rich Americans, Chinese, Russian, etc., you'll see that Canada has a far smoother power balance. There's not the extremes like the other countries have. Taxes ensure that Canada can build and maintain the necessary infrastructure, education, healthcare, and transportation systems to attract, to attract investment and businesses and thrive in a competitive global economy. Taxes make the marketplace work by maintaining a regulated business environment to protect property rights, enforce fair practices, and protect customers and investors. And taxes allow citizens, residents, and businesses to do things together that we could never do on our own. In other words, taxes allow us to be Canadian in the way that we live, work, and play. So again, no matter how much you like or dislike taxes, they really are a good thing. And everyone will have an example of something taxes pays for that they don't agree with. I have the same thing. There are things my taxes dollars pay that I don't agree with. But in general, um, if you take out a little bit of mine, a little bit of everyone else's, but for the things we don't believe in, we still have to pay the same amount anyway, because then we just need to pay that much more for the things we do believe in. That doesn't mean that we can't keep our government officials, try to keep them honest and try to keep them using our tax dollars wisely. That's a good thing to do, is watchdog those things and make sure that our money is being used in non-frivolous ways. But overall, taxation is actually a wonderful thing for society. I'm going to leave it there. You'll notice there's really not homework questions for this, but this was a rather long lesson. So you may want to go back and just make sure that you understand how to do that taxation problem, the income tax problem, the one that looks like step commission. If you're good with that and you're good with the ideas in this lesson, you're good to go. I'll stop there and we'll see you in the next lesson.